You try to short the market and the market starts rallying. You try to catch a reversal trade and the stock starts dumping on you. Why is it the case that every single time you take a trade, the market goes against you? This is a point that we are going to discuss today in this session. Hi everyone, my name is Numan Ashad and I'm a head trader at Blackland Trading. And in this video, we are going to discuss the topic of reversal trading. To be very specific, we are going to discuss how you guys can use order flow to catch a reversal trade and what are the 5 major principles and fundamental blocks of order flow that you guys should integrate in your reversal trading setups. So with that being said, let's have a deep dive. So how to trade reversal using the order flow? Here are 5 major things to look at. Number 1, understanding the context of the session. Number 2, identifying the nature of the activity, if the activity is initiative or responsive in nature. Question number 3, dissect the order book. If the orders that are coming in the market are aggressive or are they passive orders. Number 4, we will look at the volume, we will look at the delta, and we will put everything together. And we will discuss all these points in the context of a trade. We will pick a stock and we will go through each and every single point in live example, practical example, and we will try to understand how by using these points, by using these 5 major things, we can create a perfect trade. So with that being said, let's have a deep dive. So first of all, let's focus on point number 1, which is understanding the context of the session. And when talking about understanding the context of the session, there are 3 major questions that we want to answer. Question number 1 that we want to focus on is what is the macro picture overall? Macro picture not only in the market, but also what is exactly happening with the specific stock that you want to trade. Question number 2 that we want to focus on is what is the sentiment when we speak about the prices on technical levels. If the technicals are aligning with the overall sentiment and with the overall macro. And number 3 that we want to focus on is how the price is behaving around those key levels. And as we discussed earlier, we will discuss all these points by using a real-time example. So the stock that we are going to focus on today for the session is going to be the Tesla stock. So with that being said, let's first of all apply the concept of understanding the context of the session. So if you look here on the left-hand side, this is the chart of Tesla. One candle represents the daily activity in the Tesla stock. On the right-hand side, you are looking at the hourly chart of Tesla. If you look from the bigger point of view, our first takeaway is that the stock is going through a heavy selling pressure. It topped at 300 and we are seeing some aggressive selling non-stop. So the sentiment in the stock is quite bearish. However, we also determined that after quite an aggressive selling, what we are also seeing that after seeing an aggressive selling for multiple days, the stock bottomed around 210 and got aggressive bid all the way to 240. So this is the context of the session. Bearish sentiment, aggressive selling, bottomed at 210, 212 level and saw aggressive bid all the way to 230, right? Now, looking at the hourly chart, what are the 2 major levels that are the levels of interest? Level number 1 is 230. That is a big order flow level. And number 2 is 240. That's where the stock got rejected after going for a massive run. Now, let's narrow it down further and let's establish the intraday context. Right? If we look at the stock from an intraday point of view, what we are seeing that 230, we had a massive rally all the way to 240. We got a massive gap up. We retraced all the way to 230 and we established 230 as a strong zone. Next day, stock opened with the gap up. And in the pre-market, we got news and algo started selling. And we got a massive move on the downside, breaking the 230 and bottoming around 2228. So to sum it up, let's sum up the bigger context and let's sum up the intraday context. The bigger context that we established is that after aggressive selling, we bottomed out. And intraday context, we are establishing, looking at the pre-market structure, that the stock is again going through a little bit of a bearish sentiment. So to sum it up, this is how you start from the bigger picture, start narrowing it down to determine the context of the session. Now, with that being said, let's focus on the second point for the day, and that is identifying the nature of the activity. If the activity is responsive or if the activity is initiative. Now, let's first of all try to understand what exactly that type of activity means. Initiative activity is basically the activity when big folks like hedge funds, like pension funds, like institutions, banks, they start moving the price heavily in one direction. And similarly, the responsive activity refers to when the prices are considered too expensive by market participants, by other time frame participants, and they come in very, very strong and start responding. Let's go for an example. Let's say that the price has established a range, right? And this is the behaving pattern is. Now, assuming that this is a massive support structure that the price has developed, and this is a massive response structure that the price has developed, every single time that the price will come in this zone, these initiative actors will defend that price very, very strongly. Why? Because they will consider that this area is too low. So every single time the price will touch this area, we will see demand kicking in and folks defending their positions. Similarly, the concept of responsive activity. Every single time the price bounces, comes back to this area, these responsive actors will become active and will defend the price based on the assumption or based on the hypothesis that these prices are too expensive. Now, this is how the price will behave and will move in a structure until something changes and we break out either on this side or on this side. And whenever the breakout happens, then these folks, those responsive folks or those initiative folks, they start taking heavy positions and the price starts moving very, very aggressively in one way or another. Now, let's apply this concept on the Tesla stock that we picked for this session. 230 has been established as a demand zone. And as we saw in the previous session, when the price came to 230 area, buyers defended that area and we bounced very, very aggressively all the way to 234, 235. At the end, the stock closing the session at around 234 areas. Next day, we get a massive gap up from the closing position, from the closing price. But given the sentiment and given the new news in the pre-market, we sold heavily all the way to 227. Now, the concept, looking at the concept that we discussed earlier, if, as we have discussed, that 230 has been established as a strong demand zone, the hypothesis here that as the session opens, these initiative actors, as they have a strong interest in this area, they will come and defend this area very, very strongly. There will be a battle between the responsive actors and the initiative actors, and one side will win. But given the context of the session, given the context of the bigger picture, as we discussed earlier, we established that 230 is a big inflection point, big demand zone for the stock. Hence, our assumption at this point is that those initiative actors, they will defend that area. Right. So with that being said, let's focus on the next point and let's see what actually happens moving forward in the session. Now, the session opens, as we discussed, 230, big area. And what do we see? We see massive orders right here. We see stock making wicks on the downside and initiative actors coming in very, very strongly and defending that area very, very aggressively. This is a pre-market picture and this is a session picture. And what we did, we ended up trading all the way back to 240s area. In fact, breaking the pre-market highs and trading all the way up to 240 areas. So coming back to the idea that we just discussed, initiative versus responsive. This is why it's extremely important for you to determine right when the session opens, what side is in control. Is it the initiative guys who are in control, or are they responsive guys who are in control? So let's look at the third point for the session, which is dissecting the order book. And when we say dissecting the order book, what we want to focus on, we want to focus on the aggressive orders and the passive orders. Now, first of all, let's look at what exactly are the aggressive orders and what are the passive orders. Aggressive orders are basically the market orders, right? What exactly do we mean by that? Market orders are placed by big participants, right? And these participants do not care about the price. If someone wants to buy Tesla at 230, they are not going to really negotiate if the stock is at 2295 or 231. They are going to tell the broker, or they are going to place an aggressive order and say, fill me right now at whatever price that is. Those orders are called aggressive orders. Now, the passive orders are the orders which are not aggressive. These are the actors who will place their orders and wait for the price to come in that area. Now, who are the passive folks? The passive folks are the folks who are not aggressive as these guys, but they will place their limit orders and wait for the price to come at that level, to come in that area, right? So let's say if Tesla right now is trading at 232, and these guys want to get filled at 230, they are going to place a limit order at 230 and wait for the price to come into that area and get filled. So that is the major difference between aggressive orders and the passive orders, right? Aggressive orders heavily move the market, and passive folks, they really wait until they get filled. Now let's apply that concept on the Tesla stock that we discussed. This is how the Tesla tape looked like on the specific session. Here on the left-hand side, we have something called the footprint chart, or also the order flow chart, right? On the right-hand side, we have time and sales. Time and sales is the order book where you see every single trade that is happening and the orders that are going through, the orders that are executed. Now, here is your book where you want to see what exactly is happening on the price levels. What is the context? What is happening in here? We see that we opened below 230, right? And as we opened below 230, heavy orders got filled right here. Massive ask side got filled. Price moved a little bit higher. Look at the ask side. Once again, guys, the right-hand side is indicating your buy side, basically ask side, and the left-hand side is indicating the bid side, right? So what is happening if you look at in this area, that there's a lot of activity happening and a lot of orders are getting filled. But at the same time, those orders are not aggressive enough for the price to break out. But if you look at the volume, those orders are heavy. If you look at the numbers, those orders are heavy. These are passive orders that are being filled right here. These folks, they are getting filled at these prices, right? Now, that is the big difference between the passive and aggressive that we discussed earlier. Now here, and this is something that we will discuss later on as well, once those positions get filled, we see aggressive orders coming in and the price breaking out on the upside. So this is what you want to focus on whenever you are looking at the order book. You want to focus on at what prices the passive orders or aggressive orders are being filled and at what size is being traded and accepted. Now let's discuss the fourth point for the session, and that is looking at the volume. As we have already discussed, volume is the most important indicator that you want to focus on. Why? Because volume represents activity happening. Volume represents activity, that there are a lot of participants who are active in the market. Now, if you look at the 5-minute, again, we are discussing this concept on the smaller time frame scale. You can apply exactly the same concepts on bigger time frame, on monthly, daily, or whatever. But right now we are discussing the concept on a smaller intraday time frame, right? Now, if you look at the volume, as we have discussed, 230 big level. As the session opens, initiative actors, they kick in. Look at the volume spike, how the volume defended that area, and the price starts moving higher. And the fifth component of the reversal trade that we want to focus on is the delta. What exactly is the delta? A delta is the difference between the ask side and the bid side, right? So orders that are being filled at the ask and orders that are being filled at the bid, if you take the difference between those orders, that is going to give you your delta. Now, whenever interpreting the delta, you always have to look at the context, because positive delta does not always mean that the price is going to just revert and go higher. And similarly, a negative delta always does not mean that the price is going to dump. You always have to look at the bigger picture. And that's exactly why we started this session by looking at the 5 major components and building up on those 5 points. Now here, looking at the delta, again, let's have a deep dive into the structure of this candle. As we said, passive orders being filled right here. 380K right here got filled. Passive orders being filled. Even though on the candlestick, we had a gap down and looked like the Tesla is going to dump, passive orders are being filled and the price is not really moving lower. Now, if you look at the delta, we are seeing a massive positive delta, positive delta, positive delta, positive delta. And if you compare that delta with the volume, we are seeing massive volume being traded and being captured in every single candle. 2 million volume traded here, 2 million, 2 million, 2 million, 2 million, 2 million, 2 million, 2 million. Look at all these lots until the breakout. Here we have 1 million traded, 2 million, 1 million, right? So again, if we compare, if we put all these pieces together in this delta picture, what we are seeing here, that passive orders are being filled, right? Delta is positive, and high volume is being traded. These 3 are the most important things that you want to focus on whenever you want to look at the consolidation versus an auction process. With that being said, let's sum it up all together. At the start of this session, we said that there are 5 major components that are very important whenever you want to build a reversal trade strategy by looking at the order flow. We looked at why understanding the context of the session is very important, and we discussed the Tesla example for this specific point. Similarly, we discussed what are responsive and initiative actors, how to dissect the aggressive and passive bids, how you can look at the volume and delta and understand what exactly is happening on the session. Now, let's combine all these 5 points together and let's look at the trade that we have been discussing so far in the session. And with that being said, this is the live recording of the trade, and we are going to go through the points that we discussed in detail, step by step, right? What do you guys see? And this is a chart that you guys have seen before as well. Tesla opens right below 230. We already established the context of the session. We said that 230 is a big level. Now, this is a level of interest, and we want to see how responsive actors or the initiative actors come in and which sides basically takes the control. So this is a live example. Let's go ahead and play, and let's see what actually happens. Price opens, massive order here. Massive order here, a lot of activity happening here, a lot of activity happening here, but the price really not moving on the downside, right? We are seeing, so to say, a lot of consolidation. Even if you look from the candlestick point of view, one might say that a Tesla is making wicks and it is going to break on the downside. But actually, if you look on the order flow chart, you are seeing a different picture. You are looking at the components of a reversal trade. You are actually looking at the possibility of the stock breaking on the upside. So let's dissect that candle again. We have a 5-minute candle. Look at the difference. Look at the delta passive orders getting filled here. Look at the delta and look at the volume. So let's see how that happens. We are already bidding above 230, which we established is a major level on the hourly time frame. Again, we are seeing guys defending that level very strongly. A lot of bids being filled here, a lot of passive orders being filled here. Not an aggressive move yet because folks are building their position. And once those positions have been built, we see a massive move on the upside. Right? Look at that. 17Ks, 60Ks, a lot of activity with a lot of volume on the downside. And there is your aggressive move on the upside. And we have a breakout on the upside. A lot of consolidation, a lot of passive orders being filled. Once the positions are being built up, we see a big move on the upside. All the way to from 230 to 233 and more. So now let's look at the end result right here. This is how the auction process on Tesla happened, or basically ended that in that specific session, right? 230 opened, held very strongly, bid stacked, a lot of fills right here, a lot of accumulation. And once that accumulation is over, we see a strong bid on the upside with delta moving positive, with volume moving positive, with the structure of the candle on the order flow, again, showcasing that buyers are building their position and they are in control. The stock trades higher and we get a 10-point rip from 230 all the way to 240. Now, how the structure looks on the candlestick chart, this is how it looks on the candlestick chart, right? 230 defended, initiative activity kicks in, and we trade all the way to 240. So to sum it up all together, in this video, we discussed how you guys can catch reversal trades by focusing on the order flow and how you can use those 5 fundamental blocks of the order flow and construct an A+ trade. Always focus on determining the context of the session, looking at which side has the control, dissecting the order book as we discussed in detail, and we looked at the Tesla example, how the delta is moving, how the volume is moving, and by combining all those 5 points together, what is the picture that the stock is trying to tell you? I have used these components to take similar trades multiple times. And here on our trading floor at Blackline, we use these components to identify the opportunities and take A+ setups. I hope this video provided you guys some value. Go ahead, hit the like and subscribe button, and I will see you guys in the next video.